As investors and traders, it's very important to keep your eye on the intercorrelation and interdependence between markets. Across the years, you'll get a lot of rules, and Rule 217 is a really good one. No stock market can escape the US stock market's gravity. Now, what does this mean? We look at global markets because we need to understand, are the markets weakening or are they strengthening? Are we witnessing a bit of a pullback and then a subsequent rally? Or is the rally going to continue? We need to look at a lot of charts to understand what is actually occurring. And we can see from Bitcoin. Bitcoin has been coming up. Japan and Taiwan's market also. All the US markets, the UK, Australian market have been doing really well. Germany's been doing excellently, and China's market is really outstanding at the moment. The momentum so far is upwards. There are some leading risk indicators that we can look at, such as the inverted VIX, the inverted move, Bitcoin, and of course the S&P 500, all overlaid. What we're seeking to do is to get consistently reliable signals. One thing that we can see, there is definitely risk on in the market. The markets are also starting to level out, and that makes sense because they've been coming up for a significant period of time. If we get a retracement, that is really likely, and it's also incredibly healthy. I know that people want the price to just always go up forever. It's like there always being sunny days, or it always being light and never dark. But that is not the way the world works. As traders, we need to understand how the markets are moving even better than investors do, because if we get caught in a downtrend, it can wipe us out. It can absolutely obliterate us. Therefore, looking far and wide is a really good idea. And what do we see when we look at US and global liquidity against Bitcoin? And here, we're really zoomed out. We're on the monthly basis. We can see US liquidity has been coming down, it's starting to go up, just coming down, and we're seeing a bit of a kick up. In terms of global liquidity, that's taken a little bit of a hit recently. Now, what does this all mean? Well, what we can see, and let's just focus on COVID-19, or C19, that occurred in 2020. Now, when C19 occurred, global liquidity got just basically sucked out of the system, and we saw the money printer go burr. Now, what happened, for example, to Bitcoin? It came down 63.34% in a month when C19 hit. Now, how did the governments repair the damage right across financial markets? Because you know the way that Bitcoin moves is the way that the stock market moves as well. Bitcoin is a really, really sensitive instrument in the orchestra of the financial markets. Just to put this in context, if we had another one of these spikes downward right at this current time, Bitcoin would actually fall $73,000. It would literally fall down to around $43,000, which is around that area. So even though these spikes don't look like much, when you actually add them all up, they're quite significant. And if you've lived through one of these down spikes, please pop in "I've lived through it" in the comments. And you are a gladiator. Now, what are we seeing here? With US liquidity starting to kick up, there may be some systemic risks inside the US economy. Now, what does that mean? If we start to see this upward surge, a lot of people are going to interpret it incorrectly. They're going to think that liquidity just means fantastic times ahead. Well, it may mean that later down the path, but at that particular point, the reason that liquidity is pumped into the system is because things are broken, not because things are great. We will be keeping our eye on US and global liquidity. And if you like this kind of content, please smash that like button and subscribe. Don't forget to turn on the bell notification icon. You don't want to miss how the orchestra is either in tune or playing some crazy song that obliterates your portfolio. The question is, how do we get ahead and measure risk and see how the financial markets are changing? Are they going out of tune? Is risk coming into the equation? Is risk on coming into the equation? How do we look across the metals? And I've got a special thing on copper, and this is just for Michael, but I'm sure it's going to help out a lot of people. We'll also be looking into the structural levels on Bitcoin. All of these markets are one market, and the cheat sheet from ctksmethod.org will give you a phenomenal edge. If you get an aha moment in this video, please let me know what that is. They're really useful to share. Your aha moment could be the aha moment for someone else, and vice versa. We're all one big community. Inside the Profiting from CTKS Method Structure Masterclass, all of these templates are available, and there is a partial masterclass scholarship on offer for the Profiting from CTKS Structure, which is incredible. It is literally how to make money in any market, especially downtrending markets, going long at spot. When we look into the VIX, you'll find out some more details on that later on in the video. We can see that Bitcoin just pumped down and then pumped up. And then what has it been doing? It's been weakening. Why? Because the VIX is strengthening. We've talked about the VIX for quite a period of time, but you can see what is actually causing Bitcoin and stocks and also indices to weaken. It is the VIX. A lot of people simply do not know what moves financial markets, and they're consistently mystified. We can also see that the US 10-year yield and the US 2-year yield, as well as the DXY, are all coming down. Crude oil is getting hit. Dollar yen is going nuts. Having a look at row 2, we can see that junk bonds have come down, and look at how well Bitcoin and junk bonds reflect each other. Gold is also coming down at the moment. Silver is coming down, the euro dollar, the Aussie dollar, and copper got absolutely obliterated in the past trading session. Now, why did this occur? And this one is for Michael. Copper had a very, very bad day. It had a gap from the top to the bottom of literally negative 27%. Now, why did this occur? Copper does do this from time to time, but this was the largest move in terms of a single one-day drop since 2020. And in 2020, copper came down 44.57%. Ow! And that was during C19, so pretty interesting. So has copper lost its uptrend? No. What actually occurred with copper? There was a premium between the London Metals Exchange, or the LME, and COMEX, and that got absolutely wiped out. Now, why did it get wiped out? Well, it got wiped out because President Trump said, okay, the tariff on copper is going to be on finished goods, not raw goods. So all the manufacturers, all the suppliers were just stocking copper right, left, and center, literally hundreds of thousands of tons, in anticipation that it would be hit with a 50% tariff. And all of a sudden, President Trump said, nah, don't worry about that. No tariff for you. And copper basically said, huh? And that was followed by much screaming as the basically the premium between the US and Europe evaporated. Now there's a US glut, and because they've got so much copper basically stockpiled, it's going to hit the market. So we would anticipate more negative downside action for copper. We also had a weak PMI come out of China, so that is also not so good for copper. And you saw before that the USD came up as well as the 10-year and the 2-year. That also puts pressure on commodities. I hope that helps out. And just one of the things to remember, copper is currently in a monthly uptrend. The markets could get a little bit dodgy as non-farm payrolls is expected to come out later today. Now, when we look at row 3, which are the major indexes, the S&P 500, the NASDAQ, the Russell, and the Dow. Now you can see how closely Bitcoin and the S&P 500 are following. also the Nasdaq and Bitcoin. Just understanding these intercorrelations is vitally important. Now, I mentioned yesterday that it didn't look like the Russell 2000 was buying this recovery in terms of the stock market, and it's pretty damn obvious now that the Russell spoke the truth. That is Russell for you. What a great guy. Until we see some basing action and reversing action inside the Russell, just anticipate the potential of more negative downside action. Having a look across to row 4, we can see Apple is way under pressure. Tesla is also under pressure. Nvidia is under pressure. Microsoft jumped up and then sold back. And we can see MicroStrategy is also under pressure. The way the stock market moves directly impacts Bitcoin, and literally Rule 225, Bitcoin cannot escape the stock market's gravity. If the US market is coming down, global markets will follow, and Bitcoin is in all likelihood leading the way already. This means that we must look at markets as one orchestra, not as a single instrument. One of the best ways to figure out where the main markets are going and global markets are going, and I mean stock markets are going, is simply to look at Bitcoin. If Bitcoin is selling off, you can be pretty much assured that the Nasdaq, the S&P 500, the Dow, the Russell, all of these markets will be coming down. Now, don't forget, certain markets trade at certain times. Some are closed, believe it or not. We know that no alt can escape Bitcoin's gravitational pull, and when we look at total crypto market cap, which is literally every single crypto project, what is happening? It's all coming down. And you can see this overlay, which is crypto total market cap, which is the white line, against Bitcoin. Now, what does this mean to you? And that's a really important question. If you see Bitcoin coming down, you can assess that the main markets are weak. The VIX is likely to be spiking. The DXY, the US 10, the US 2, dollar yen is likely to be going up. These are all confirmation signals. Being an institutional one is really important. A lot of people just look at their chart. They would, for example, just look at Pepe or just look at Ethereum at ETH and say, I'm just going to analyze ETH and I don't know about the VIX, I don't know about intercorrelation, interconnection, I don't know anything, but I'm sure I'm going to be profitable. You could do that, of course, but if you understand that Bitcoin controls ETH and total crypto market cap is also controlled by Bitcoin, but Bitcoin is controlled by the main markets, well, that's a much better issue. It's a much better place to be. Because if the US markets are tanking, you're not going, you only live once on Ethereum, because you might be right. It's good to see yourself as a professional trader and investor, and we know all investors become traders anytime they buy or sell. So it's very important that you can actually trade, and actually trading is a lot different from investing. Investing, you just go in and say, I'm going to hold this. When you trade, you look at everything. You have the same motive, which is to make money, but you do so in a completely different way. And combining both is the way to go. Now, what have we seen recently? The VIX surged and it's been surging ever since. This means that the main markets are under pressure. Bitcoin is under pressure, but everything tends to resolve itself. Don't get freaked out about the market, just observe structurally. And we know the 118,600 level, which is what we needed to see convert into support, just didn't hold. And it didn't hold because the DXY, the US 10, the US 2, dollar yen, and the VIX all decided to party at the wrong time. But unlike other people, we actually know what is driving the market. They're guessing, we're looking. Now, what does it mean for you just going forward? Well, until the VIX starts to base out and starts to come down, we just anticipate more negative downside action. Now, does that mean we should be out entirely from the market? No, not at all, because the markets can change in a flash. The market is always moving in waves, and we can see there's a degree of upward momentum just establishing itself inside Bitcoin at the moment, but it's really important that we get above the 117,000. That will open up the 118,000 structural resistance level. There is always money to be made in markets. So long as you know where the structure is, you're fine. In truth, you can make a lot of money on structural cuts, so please be aware of this. And the Profiting Masterclass students absolutely understand what I'm talking about. The levels to keep on your radar right at the current time. The 117,000 is really important for Bitcoin to hold and convert and flip to structural support. If we can't hold the 117,000 zone, that's opening up lower levels of structure. Typically, what we would anticipate if we can't get above the 117, a movement towards 114,800 is definitely on the cards. But if we can just consolidate around this 117, that could actually raise up the 119,000 level. Therefore, don't get too negative on the market. You'll find that you make most of your money when it's in a downtrend. And going long at spot. It's a pretty weird concept, but it's true. A lot of people will get really certain that they should be going short in market conditions like this, and it may pay out for a while, but it's not going to pay out forever. When the average person decides to go short on crypto, that's probably the bottom. The key is not to be certain. Certainty is not your friend. A lot of people say, oh, I need to know where it's going. I must know the exact price. Well, you know it's going between structural resistance and structural support, and that's it. And there's an intercorrelation between markets. Decipher that, you've got the code of the market. Just having a quick look through row 6, we can see that Litecoin was doing quite well, but it can't escape Bitcoin's gravitational pull. Neither can Bitcoin Cash. What about Binance Coin? Well, it's holding up pretty well, but it's also coming down. What about Ethereum Classic? Coming down with Bitcoin. Let's have a look at ADA. ADA is just following Bitcoin's gravitational pull. Solana is doing the same. Dogecoin doing the same. And XRP doing the same. I did this video because I want you to understand how the financial orchestra plays together. To do that, you need to know a lot of things, far more than what retail investors and traders know. In fact, retail traders and investors basically just know emotion. And if you know emotion, it's of course the starting point, but you want to disconnect that emotion. And we've not even spoken about levels as yet. And we can see from Solana is coming into structural support around that 174.27 mark. There is the distinct possibility of a bounce. How far it goes is another thing, but it's there, and those bounces can be very, very profitable. I'm offering a partial scholarship to the Profiting from CTKS Method Structure Masterclass. You'll learn so many things, and you'll actually see me trading as well in a very, very harsh market. You'll find the knowledge incredibly valuable, and inside week 2, you'll get to understand how to predict tops and bottoms across the cheat sheet components, independently assess direction, and literally become an institution of one. Inside week 3, you'll figure out how to do your trades, trading plans, trading goals, trading styles, all sorts of things. Very, very profitable stuff. And then in week 4, we pull it all together again. Looking at market permission is a really important thing to do. As the markets get turbulent, it's really difficult for investors to make money, but it's always easy to make money for traders because traders basically are just in and out of the market. If you would like to understand better how all the financial markets in the world move together, I am offering a partial scholarship to the Profiting from CTKS Method Structure course. You can directly message me on LinkedIn to find out more. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.